This is our Forex blog for October 28th, 2013, and this is the easiest way to trade using our software. These are our currency indexes, which show you what each individual currency is doing. You get a wealth of information by looking at the chart. You can see, for example, a double bottom's made. You can see when the dollar is in a downtrend and breaks the trend line and then explodes up. You can see the trend line on the way up. When it's broken here, the market goes down for the next 2 hours. You can see a little mini double bottom right here and it goes up. You can see the previous day's high of the euro, for instance, the previous day's low of the pound. You can see when the pound was going sideways for many hours, basically not going up nor down in a very tight range, and breaks out. That's a trend that's very likely to continue. You can also see when that trend and pattern here, a little wedge pattern, happens, and you can see it break down underneath the hourly, do a retest right here. Very high probability, likely to go down. Where's it likely to go down to? Our lower containment bands, Fibonacci profit targets, a slew of different technical tools kind of give you a feel for where the market will go to. You can see it went right to the 1.618 fib target and right to the lower containment band. You can also see the daily, weekly, monthly trend of each. For instance, the euro, all the time frames are pretty much for the most part upward, and so when it was in a downtrend earlier and broke from beneath to above its hourly moving average and did a retest right here, just a super high probability place to be looking for buys. And you want to buy the euro against whatever one's the weakest. The yen looks pretty weak. However, it's now on a short-term uptrend. If it can't get above the previous day's low right here, it's likely to resume its downtrend. The pound is extremely weak at this point. The weekly trend's down, the monthly trend's down, and it's made a 62% retracement up. The euro pound at 10 o'clock is extremely likely to go up. So you want to look for a buy at 10 o'clock in the euro pound. And so there's basically two methods that we look for entries. The preferred method is a pullback, where you have a trend that's up, and then you kind of wait for a pullback, put your stop underneath the low by a few pips. You can see it went a little bit our way, came down, didn't stop us out, and then exploded up. And you're never going to catch every pip of a particular trend, but if you can catch a small percentage of the move, or I should say 60–70% of the move, if that is 2.5 or 1.5, 2 times bigger or more, that's a good trade. Small losses, big wins is the key and the only secret to trading. A lot of people just want to see Forex signals that tell them when to buy and sell. So let's bring these up on the chart. I just added our new Forex signals. It takes it downloads a ton of information before it shows up. We'll wait for it to show up, and I'll show the signals. Alright, we're waiting for this to show up here.
Euro dollar. Buy alert. Euro
okay,
dollar.
so we just got a buy signal here. But you can see, even if you don't know how to trade, using our Forex signals to let you know when to buy and sell, I did a pretty good job today. This is, one of the better days as far as accuracy goes. This is the only trade right here that did not work. Every other trade worked, and time will tell whether this last one here worked. But the point is, if you are watching the chart and the euro has pulled back and is kind of, looks like it's turning the corner here, and you can see the dollar is breaking down after 4 o'clock. That's a pretty decent place to be possibly looking for euro dollar buys. If you see the dollar up to a statistical likely reversal area, and it's likely to come down, and the euro is showing some strength, that's a pretty decent place to be buying the euro dollar. In all 8 major pairs we have in our software. Here's some of the other pairs. You can see that the New Zealand was trending up, came down to yesterday's most actively traded price. It's acting as support. The only downside in looking for a buy here is that the weekly trend is pretty weak. The monthly trend is kind of mixed. So, if this kind of breaks out of the trend line off those highs, you could be looking to buy the New Zealand. And you want to do it against whatever one's weakest. Now, the Swiss is weak at the time. However, the weekly monthly trend is up. Let's go take a look at the yen. At this particular time, the yen is weak. It looks like it's pulling up a little bit. It's likely to find some selling at the previous day's low. And so at 3 o'clock, 4 o'clock, one of the higher probability trades would be to buy the New Zealand yen. So here's at 3, 4 o'clock, you're looking to buy. And there's basically 2 methods that we look to get in. It's a little pullback trade, or if we have, hour and a half, 2 hours rectangle pattern, which just kind of meets both criteria, you would get in, you put your stop right underneath the low, and you have a very tiny risk. And you can see this kind of shot up a little bit, and you also have a nice little flag pattern right here, and then it took off. You're never going to catch every pip, but let's say you catch 60% of that trade. It's a much bigger win than what your risk is. And that's really the only key to trading. Small losses, big wins. And if you don't want to have to learn support, resistance, Fibonacci profit targets, trend lines, Andrew's pitchforks, pivot points, daily, weekly, monthly, previous days, weeks and months, high and low, all of our statistical tools. If you don't want to have to learn all that, containment bands, our new center of gravity polynomial regression bands that we're about to release this week. If you don't want to have to learn how each tool works and develop a trading system based on it, you can just, like I said, just take the buys and sells that show up in our signals. And they do a pretty good job by themselves. And this is about 10,000 lines of code, and I would really say about 7 years worth of work involved in this, in 6 months actually coding these themselves. 6, 7 years of developing and testing all kinds of different trading systems, losing money on the ones that didn't work in order to come up with the ones that did. But you can see it's very, very high probability. Most of the trades, go a little bit your way, as you can see. There is the occasional loser, which really only goes 1 bar your way, and then it reverses. And then there are on Sunday where the market caps up. This trade should not have happened. Obviously, that was a loser there. This is still in beta, and I'm spending probably 5 to 10 hours every day working on it and improving it, trying to fix 5 or 6 different bad patterns that show up every day. Today there was only 1 trade that was bad, which was right here, and I put in a rule that looks for double bottoms, and if there is a double bottom, if it's a low probability trade, then we don't take it. There was a sell signal here earlier in the day, and I fixed that one. So that's what I do every day, try to get rid of the trades that don't work, put in extra rules for the ones that do to make sure that they continue to work at a high percentage time, and find more pips than they lose when they don't work. And you can get our software for free by opening an account with FXDD, Forex.com, FXCM, Allpari through our website, leverageFX.com.